Hello and welcome. For thousands of years, gold has been the ultimate asset, but let's be honest, owning it has always been complicated. Well, today we're going to crack open the digital vault and look at a modern way to access this ancient metal without needing a shovel or a safe. Our guide for this journey? The iShares Physical Gold ETC. Let's dive in.
So, let me just ask you this straight up. Have you ever thought about investing in gold? That feeling of wanting something solid, something real, especially when the world feels a little uncertain. It's an idea that's been around forever, for a very good reason.
But then reality hits. Okay, great, I own a gold bar. Now what? Where do you keep it? Under your mattress? That's a logistical nightmare, right? You've got to think about security, insurance, the whole shebang. It's a major headache that honestly keeps most people away. So what's the fix? Well, the answer comes in a pretty clever piece of financial engineering. The exchange-traded commodity, or as you'll hear it in ETC. This was basically designed to solve that exact problem, bridging the gap between your modern investment account and a physical stack of gold bars.
The idea behind it is actually super simple. Think of a share in an ETC like a digital claim ticket for real gold. You buy the ticket, and that ticket proves you own a tiny, specific piece of an actual gold bar that's sitting somewhere in a super secure professional vault. You get the exposure to gold's price without any of the drama of storing it yourself.
So here's how it works, step by step. First, you buy a share, just like you'd buy a share of Apple or any other company, right on the stock exchange. Easy. When you do that, the fund makes sure that a real, physical amount of gold is set aside. Then, that gold gets stored safely with a custodian, usually a massive bank, in one of their secure vaults. And finally, the price of your share? It just moves up and down, tracking the global market price of gold. It's simple, it's transparent, and it's really efficient.
Okay, so theory is one thing, but let's see how this actually plays out in the real world. We're going to pop the hood on a specific product here, the iShares Physical Gold ETC, which you'll find under the ticker symbol SGLN.
So, what's the deal with this particular ETC? Well, a few things stand out. First, you're getting direct exposure to the day-to-day price of gold. The gold bars themselves are physically allocated and segregated, which is just a fancy way of saying there's a specific pile of gold with your name on it, metaphorically speaking. It's also 100% responsibly sourced, which is a big deal, and it's even structured to be Shariah compliant. And that responsible sourcing thing, that's not just some marketing slogan. The fund sticks to the rules of the London Bullion Market Association's Responsible Sourcing program. This is a huge deal because it ensures the gold supply chain is tracked and ethical. It's about knowing your investment isn't just shiny, but it's clean too.
So, what does all that gold actually look like? Well, get a load of this number. 224.58. That's not ounces, that's not pounds, that's the number of tons of physical gold held in trust just for this one product. To give you some perspective, that's like the weight of 40 full-grown elephants just sitting in a vault. Wow. And here's the absolute key takeaway. There's a direct line between your share and that gold. When you buy one share, you are buying a legal entitlement to a tiny slice of those actual gold bars sitting in a JP Morgan vault over in London. Your digital asset has a real, physical, and very heavy counterpart.
Now, of course, having someone manage and guard 40 elephants worth of gold for you isn't free, but the cost is pretty low. It's just 0.12% per year. You can think of that as the fee you pay to avoid the cost and headache of renting your own vault and hiring security guards.
That little fee has a name, the Total Expense Ratio, or TER. It's the all-in, annual cost for the convenience and the security of owning gold this way. It covers everything, the vault, the insurance, the administration, all rolled into one small percentage.
All right. We've seen how it all works, which is great, but now it's time for the reality check. This is probably the most important part of any financial explainer. We've got to look at the performance, and just as critically, we need to talk about the risks. Because any investment is always a two-sided coin, potential rewards and potential downsides.
And before we look at a single chart or number, we have to get this mandatory, and frankly, very wise, disclaimer out of the way. What happened yesterday, last year, or a decade ago is just that. It's history. It gives us context, sure, but it is absolutely no crystal ball for what's going to happen tomorrow.
And you can see that volatility right here. These numbers show that pretty clearly. The value actually dropped a bit in 2021 and 2022, but then it saw some really nice gains in 2023 and 2024.
This is a perfect example of the fact that the value can, and absolutely does, go both up and down.
So if we can't use the past as a guide, how in the world are we supposed to think about the future? Well, regulators actually require funds to show some hypothetical scenarios. Now, let me be clear, these are not predictions. They're just illustrations of what could happen.
This table shows what might happen to a $10,000 investment over 5 years if the markets go through different phases. You can see in a really bad stress scenario, you could lose a good chunk of your money. But in a favorable one, you could see some fantastic returns. The main point here is the massive range of possibilities. Nothing is guaranteed. Okay, let's bring it home with our final section. And we're going to really focus in on the key risks. This is the stuff you absolutely need to know and understand before you'd ever consider an investment like this. This is the fine print, and believe me, it matters. First and foremost, let's put the official warning up, loud and clear. Your capital is at risk. There are zero guarantees in the world of investing. The value of your investment can go down just as easily as it can go up, and you might get back less than you put in. And to get a little more specific, you have to remember that gold prices can swing around a lot more than other things like stocks or bonds. Also, if you're buying this in, say, euros or pounds, the dollar exchange rate can help or hurt your returns. And this is a big one. It's a limited recourse product. That means your investment is only backed by the gold in that vault and nothing else. So, let's just tie this all together. At the end of the day, what we've been looking at is a modern, incredibly convenient way to get exposure to physical gold. It's a tool, right? And like any tool, it has some clear potential benefits, but it's also inseparable from the risks that come with the territory of the gold market itself. And that leaves us with one final thought to chew on. In a world that's getting more and more digital every single day, is this kind of product, a digital key that gives you ownership of a very real, very physical asset, is that the new gold standard for how we invest? That's a question for you to answer. Thanks for watching.